Welcome everyone to the Vested Interest channel. This is Shane back for a stock pick of the day video. We're going to take a look at Huntington Bank today, another one out of the financial sector, much like PNC Bank yesterday. Now this is the Vested Interest stock screener. This is my screener. This is how I select companies that I want to do more of a deep dive into the financials, looking at so if they make it through this screener, I want to look more at their balance sheet, their income statement, stuff like debt to equity ratios. Are they paying down debt? Is their revenue growing? Are their margins expanding? Other criteria there that I look at, but that is a deep dive. This is just an initial screener, so it does not mean I am buying the stock if it makes it through the screener. It just means I'm interested again in doing more of a deep dive and then possibly doing a discounted cash flow analysis if it meets that deep dive, and then figuring out a price I'm willing to pay and maybe adding it to the future. But even if I was to be adding a stock, you should not be adding it just because I'm buying it or anyone else you're watching on YouTube is buying. You should be doing your own research and investing based on your investing criteria and your timeline to retirement. Now, this is the criteria we'll be going through in the video. It must meet 6 of 9 to make it onto my watch list. All right, back to Huntington Bank. You can check them out on their homepage, www.huntington.com. That's www.huntington.com, www.huntington.com. That's their homepage where I pulled this information from. Huntington is a full-service banking provider founded in 1866, primarily operating across a 13-state banking franchise of Ohio, North Carolina, South Carolina, Colorado, Florida, Illinois, Indiana, Kentucky, Michigan, Minnesota, Pennsylvania, West Virginia, and Wisconsin. They definitely have them here in Michigan where I'm at, and down in Ohio. I worked there for a while, so I definitely saw them down there. Some of these others I can't really speak to, but it is more of a regional bank, even though Florida is kind of outside of our region. So is Colorado. That would be out west. That would be down south. North Carolina, not too far away, but Ohio, Indiana, Michigan, Minnesota. I guess Kentucky's a little bit away. Pennsylvania, yeah, kind of scattered across the, can't even say really the East Coast, but not really a national bank is what I'm getting at there. But it does look like they have 1,000 full-service branches and over 1,600 ATM locations. The branches is really what you want to look at there. So they are a brick-and-mortar bank still. My bank, Ally, is actually all online. So some of them have gone that way. Now they do offer online as well, but and they offer the same things typical banks do, right? Checking, savings, credit cards, home and auto, personal loans, investing in financial advising, retirement planning, and trust. It's just like PNC that we looked at yesterday. They're a bank, a typical bank. They've been around for a while. Now, the reason we're taking a look at them, down 2.51% on the day. Plus, I'm looking at financials right now, if you hadn't noticed. So that's part of the reason for the review of several banks. Down 2.51% on the day. Close out the day at $16.34. 52-week range as low as $11.92, as high as $18.45. They are closer to their 52-week high than their 52-week low, and not within 15% of a 52-week low. They need to be under $13 and some change per shares. Market cap, $23.824 billion, a beta of 0.98, so just slightly less volatile than the overall market. PE ratio is at $12.19 per share, but really PE is meaningless for banks. You want to look to price to book. We're going to look at that here in a second. Earnings per share, EPS, is at $1.34 per share. Earnings date, October 17th, so that is coming up here, a little over a week away. Forward dividend yield is at 62 cents. They are quarterly payers, divide by 4. Current yield is at 3.7%. Very nice starting dividend yield on this one. Ex-dividend date, September 17th. We are past that. Looks like they paid out on October 1st. Kudos to those of you who received your dividend and are Huntington Bank shareholders. 1-year target estimate, 1977. That would be a new 52-week high if it was to get there. That's according to Yahoo Finance, where I pulled this information from. Now, I like to look at dividend yield theory as a potential initial are they overvalued, undervalued, or fairly valued metric. And to do that, you look at their 5-year dividend yield average, 4.44%. You compare it to the current, 3.7%. Over here, forward, 3.7%. Forward is the current dividend. It's the actual dividend right now, as well as what they project it to be, but that could change tomorrow morning. But anyways, so you compare the 5-year dividend yield average, 4.44%, to the current, 3.7%. Since it is lower than the 5-year average, that speaks to overvaluation. The numbers are inversely correlated. If this number was higher than the 5-year average, that would speak to undervaluation. So at least according to dividend yield theory right now, this one is potentially overvalued. Payout ratio is under the 75% I'm looking for at 46.27%. Now, price to book, that's a better metric than price to earnings for financial companies and specifically for banks. One being fair value. So if it's over fair value, which it is, 1.31%, that speaks to potential overvaluation. So not only is dividend yield theory saying it's potentially overvalued, so is price to book. You want for banks to be under one fair valued, over one overvalued. Current is at 1.31. You could have gotten them cheaper back here in September of 2024, cheaper even back in March of 2025. So they are relatively on the high end, even compared to where they've been over the last year or so. Now, free cash flow, I like growing free cash flow because companies can do some things with it. They can keep it on their balance sheet as cash or cash equivalents. Banks would probably be investing or giving out loans. They can make acquisitions, reinvest back into the company itself, pay down debt, pay a dividend, which this company does, and raise that dividend over time, as well as buy back shares. We want a company to be able to do, or at least I do, want a company to be able to do all of that. So we want growing free cash flow. Going back to December 2021, 1.8 billion. 2022, 3.8 billion. Nice jump up there. 2023 was down though, right? So nice jump up in 2022, down in 2023. Looks like a further decrease in 2024, though they really increased their repurchase of shares. We'll talk about that in a second. Trailing 12 months looks like they're back up at 1.9, but keep in mind, trailing 12 months still includes part of 2024 numbers. Looking at repurchase of capital shares, 1.3 billion in 2021, nothing in 2022. 2023 had them at 82 million. 2024, big jump up to 4.1 or 410 million there. So actually, I would say there probably was, or pretty close to growth in 2024. Maybe if you did the math on how much it would have cost them to buy back these 410 million shares, maybe that's enough to offset the free cash flow. But even still, it was down in 2023, so that doesn't matter. All right, jumping over to stockanalysis.com. This is another source I go to for information. They have 16 analysts that are taking a look at this. They do call it a consensus buy. Low estimate of $16. It would need to drop down 2.05% to hit that low estimate. Average estimate of $19.03, pretty close to what we saw with Yahoo Finance on the previous page. That would potentially be a 16.5% increase from where it currently sits. High estimate of $23 would represent a potential 40.8% increase from where it currently sits. I like to look at return on capital employed and earnings per shares as two early statistics there. They did not have anything listed for return on capital employed. EPS growth, I like over 5%. They did have this at 5.86%, so just over that 5% I'm looking for. And revenue growth forecasted, even though this is more of a deep dive number I look at, I just included here, and it's at 5.99%. Quarterly payers, we mentioned, low payout ratio, under 50%. Right around 45, 46%. I like 75% or lower for companies that are not REITs or BDCs or other companies that have to have a higher dividend payout. Dividend growth, though, is a no-go on this one. They have held their dividend steady for several years. I actually held Huntington Bank shares, and that's part of the reason I sold them, was because of the non-dividend growth. Buyback yield is negative 0.62%. We'd like to see that positive. That means they are not buying back more shares than they are issuing. They are diluting you as a shareholder. Shareholder yield is at 3.08%. That is positive. They do pay off schedule, January, April, July, October timeframe, which is nice if you're trying to even out your dividend payouts throughout the years, or throughout the months of the year. But going back to March 2023, they paid 15 cents, and that's where it, and some fractions of a penny, and that's where it remains today, right? So again, I held Huntington Bank shares a couple years back, and part of the reason I sold them was because they had paused the dividend, and it didn't look like, and it looks like it was the right decision because they haven't raised it. It didn't look like they were going to raise the dividend anytime soon. I have not read anything to see why they are pausing it still, or what the projection is for them to continue to raise it, or if they will in the future, but they have paused it for quite a while. All right, let's run through the screener. Understand the business. They are a bank, like most banks. They're giving you savings, checkings, helping you with your retirement. If you want to make some loans, home loan, auto loan, that sort of thing. That's what their student loans. That's what they're offering. Growing free cash flow, no. Up and down. Growing dividend, no. They've paused it for at least the last several years. Dividend payout ratio is under 75%, under 50% actually. So check there. Dividend yield theory says they're potentially overvalued. No check. It is not within 15% of a 52-week low. No check there. Return on capital employed was not listed. No check. Earnings per share growth was over 5%. So check there. Price to book was not under 1. No check there. So you're only looking at 3 out of 9. Doesn't make it onto my watch list. Again, I did hold this one a while back. It did sell out of it. Looks like it might have been the right choice. Let me know what you think of Huntington Bank. Is it one you're holding? Is it one you're buying? Maybe you bought it a long time ago, like I did, whenever it had a really high dividend yield, so you don't care about no dividend growth on it right now. That's certainly okay as well, depending on where you picked up a stock. I take that approach with OHI, for example, Omega Healthcare Investors. I bought it with over a 9% dividend yield, and it hasn't raised its dividend in several years, but I'm comfortable holding it with over a 9% dividend yield. But that's not what we're here to talk about. Huntington Bank, let me know what you think of it. Let me know what you think of the video. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click all those other buttons, the notification, the bell, all of that. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section. I'll work it to the rotation on the day it pulls back and run my screener on the business for you. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. See you next time and have a great week. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing, educational, and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.